Gents, GM,
Will, what's happening?
not too much, man. How you doing, Danny?
Good. Good.
Been looking forward to this, actually. The last one we did was really fun. So
Yeah, absolutely. There's no shortage of topics to discuss either.
yeah,
So
every month there's
we'll just
something new.
indeed.
Feels like this year's. I'm gonna botch the saying, but it's like whatever. In a month, a decade happens. There's some years where nothing happens. Feels like I know I completely just botched that saying, but it feels like this has been one of those years where we're 4 months in, and it feels like the second and third order effects of everything that's happened so far this year is probably going to play out for years and years to come. So
Exactly. It's like the Narnia effect, right? You just go through that wardrobe and time flies.
yeah,
All right, we'll give this 1 or 2 more minutes and we'll get rolling.
sweet. While we're waiting, I'll just kind of use this as an opportunity to talk about this. I guess internally for listeners, I'm sure you might have seen me posting this on Twitter, but we're working on a user adoption report here at Blackware Intelligence. So it should be released in the next 2 weeks, probably the middle of May at the latest. Finding a lot of really interesting stuff, and I think it'll be a report that'll be well timed with a lot of geopolitical and macro uncertainty that Warren will jam on, and I think this will be a good report to look at that puts everything in a broader lens and perspective to zoom it out and really think about the bigger picture. We write a weekly newsletter, and obviously we're talking about kind of this short to medium term market dynamics, but I think this has been really refreshing for me personally, just to do a piece where I'm like looking at the broader picture and kind of getting back to the basics a little bit. It's been fun. I used to write articles like before. I mean, I had a Twitter following or anything. I used to just kind of like do these medium articles for fun, and then like Preston Pitch just so happened to like retweet one of them, and I got lucky that he found them. But I used to just like post these articles just to like get my thoughts out, and writing in general is like a really therapeutic process for me personally. I'm not sure if you guys agree with that, but I like to sometimes just like jam and have a couple cups of coffee and then just like get all my thoughts out. And like as you do that, you start to like poke holes in your thinking, and you really have to like go back to the basics. And um, maybe as you're writing as well, it stems your brain on like a whole rabbit hole of diving into a certain topic. So I love a little rambling here, but I love writing, and I think this has been really fun and refreshing for me, and I can't wait to share this report with everybody. I think it'll be one of the more. I mean, of course, I'm biased, but I think this will be one of the more like impactful pieces for the community.
That's great, Will. When can people expect to get their eyes on it?
So we're finishing up the report probably by the end of this week, pushing into next week at the latest, but we'll probably have it done by the end of this week, and then we'll probably have everything ready to publish and send out in the middle of May. We'll of course tweet it out from the Blockware account as well as mine, and probably send it out through the newsletter as well. So you'll know when it's dropped, but it'll be the middle of May at the latest. So excited to share that.
Right on, man. Cool.
Working on
All
a lot
right.
of interesting reports here at Blockware Intelligence. Aside from that as well, Joe's just finished up one and worked on Warren with it, so I'm sure they'll talk about that. But expect probably 2 or 3 at least, major kind of fundamental research pieces from the team throughout the year. We're trying to do at least once a quarter of really high quality reports.
Great, man. Much appreciated. All right, let's get rolling here. So, everybody, thanks for joining us. My name is Danny Condon. I'm the Chief Revenue Officer at Blockware Solutions. Today we have three speakers. I'll be moderating. We have Joe Burnett, who's going to talk about mining and what he's seeing in kind of that landscape currently. We have Will, who's going to talk about on-chain and derivatives, and then we have Warren Rogers, Blockware Solutions CFO, who's going to kind of lead the macro discussion. We figured that this session, macro is really driving a lot right now, in the markets in general. So we'll probably spend more time today talking about macro. We'll kick it off with Will. We'll pass it over to Warren to talk macro, and then we'll finish with Joe in mining. Before we get started, just for those of you who don't know, Blockware Solutions, we are a leading vertically integrated Bitcoin mining company. That's really our core business. So we sell, investors, both individuals and institutions, Bitcoin mining hardware. We provide co-location hosting services. We also have a staking business. So if you're interested in staking, that's something we can help you out with. And then most of you are familiar with our media and research arm called Blockware Intelligence. So if you're not signed up for the newsletter, which Will has been talking about, it's a weekly newsletter, great content. Certainly sign up for that. And then we have our podcast series led by Will as well. And I will just shameless plug. We have a killer lineup, coming up on the podcast here. So we're really excited for the next, 2-3 months there. But enough about us. Let's get rolling. So, Will, why don't you kick it off here? What are you seeing, kind of from an on-chain perspective?
Sure. I'm actually going to first start with price, just like general kind of price structure. And this is like kind of a framework we've been talking about for a month or two that I stole from my buddy, Avi Feldman, who works at a hedge fund. We've talked often in our newsletter about this kind of like value momentum framework. And I think in this market you have value buyers. A lot of those tend to be kind of, broader time horizon, at least kind of 3 to 6 month based market participants, if not longer than that. And then you also have momentum based market participants, trend following market participants. So from kind of this momentum standpoint, we've been talking about this for a while, kind of see that threshold as closing several consecutive closes above the 47K area. That's based on a few things. The first thing is just weekly price structure. So if you just look at weekly candles and see, where the kind of price structure is, that's been a key level on the weekly. The yearly open sits right around there. I think it's like 46,000 and a half, right around the 200-day as well. The short-term holder cost basis, which has been a really key level we've been talking about like nonstop, that sits around 47,000. There's a lot of kind of behavioral dynamics embedded into that, just like market behavior dynamics embedded into that, and then also the 180 week exponential hold moving average, which is just a moving average that kind of has a bit more weighing to recent price action, so it's kind of got this like smoothing effect to it. That's at 47K as well. So looking at that area to be reclaimed from a kind of momentum perspective, and then value we see as the low 30s. And that's just based on price structure, and then as well looking at order book depth, both in an aggregated sense and then across a few key venues that we look at to kind of have high hit rates. So that's that, and we're kind of sitting in this like no man's land, as we've been saying for the last few weeks in the newsletter. I think from like an actionable sense, until either of those thresholds are hit, not too much to do, which is kind of boring. But you got your short-term traders who are looking at like intraday stuff, but this is really for kind of a more medium-based, several month kind of threshold trader. So that's kind of just like pure price structure from on-chain. I think this is interesting, especially when we pair this with one of the bigger talks or bigger topics that we've seen on Twitter lately, and just in general, seen a few articles about this in Bloomberg, is the correlation to the NASDAQ. So obviously, and I'll tie this into on-chain in a second. Obviously, Bitcoin's been trading at extremely high correlation to the NASDAQ. Actually, last week on kind of a daily correlation, Bitcoin reached the highest correlation ever to the Nasdaq, which was a record that was previously set in January. Unironically, that broke again last week. It got as high as 0.98 or 0.98, which is an extremely high correlation, basically trading tick for tick with the Nasdaq, which is obviously indicating to you that a lot of these traditional finance market participants who have come into the space over the last 2 years, have viewed Bitcoin as this kind of risk-on tech asset, while at the same time, under the surface, from an on-chain perspective, you've seen a lot of kind of accumulation slash holding, however you want to word that phenomena, based on like several different measures. So first of all, one kind of like headline metric to of an example of this would be the fact that there's an all-time high amount of supply that hasn't moved in at least a year, which is pretty remarkable, right? You've got all this uncertainty in markets, all-time high amount of supply hasn't been moved. So there's this convicted base of holders that are sitting on their stack, and likely have a broad time horizon, and aren't getting shaken out despite a lot of the stuff that we've got going on in the world today. Long-term holder supply is kind of holding. It's not increasing aggressively anymore. It's kind of just going sideways. Illiquid supply increasing, which that's it's basically based on the spending history of entities on chain. So when illiquid supply increases, it means that supply is moving to entities with a low history of selling. And then the last thing I had written down, which I wanted to mention on this topic, was the post I just made about whales holdings. So I find this really interesting. It's actually kind of baffled me that we've seen this continued increase. What I'm defining as whales holdings, to preface this, is entities that have over 1,000 BTC, and then I'm filtering out all these known entities on chain. So, for example, exchanges being the obvious one, right? Because if you don't filter out for exchanges, you might be perceiving whales balances are increasing when coins are actually moving on to exchanges. Or conversely, if you haven't filtered out exchanges, you could see a decline in what appears to be whales holdings when in fact it's coins coming off exchanges, moving into cold storage. So you need to filter out exchanges, filtering out OTC desks as well, Grayscale, the Purpose ETF, QBTC, all these kind of known on-chain entities identified by Glassnode. And then we kind of get the what I call filtered whales balances. So that increased from the beginning of, or I should say middle of 2020, all the way up until early 2021. This declined from February 2021 all the way through that distributed top, all the way down into the summer, picked back up at the end of summer, and then started declining again after the end of September. So declined from the end of September all the way down until January of this year. We saw a big uptick at those lows in January, at the end of January. So some bottom buying from whales, and then they distributed again into kind of these touches of this upper echelon of the range we've been in for the last few months. And sold the top of that range, and then interestingly have been buying over the last month or so. So that's a phenomenon that I've been surprised to see continue. So their holdings are now the highest they've been since September of last year. So, across the board, the point I'm trying to illustrate through all these different metrics is essentially that you've got this core base of, likely fundamental investors that, have conviction in BTC, while at the same time you have, a whole another cohort viewing BTC as this correlated asset to the Nasdaq. And so with that in mind, like for BTC to go up, you need one of two things. Either A, the obvious thing, if the high correlation continues, would be to see tech rebound, and that would drag BTC up through the correlation. That's the obvious one. The other one would be a decorrelation, which I think is currently the less likely of the two in the moment. But I think for that to occur, it's going to take time. I think it'll take several months for that kind of supply transfer that I think is kind of going on beneath the hood to play out. And I think the kind of the data I just described is illustrating that. And this kind of range that we've been in is somewhat of an equilibrium between those two cohorts, and this kind of supply transfer. But obviously in the short term, extremely high correlation to the Nasdaq, and that's been driving a lot of Bitcoin's price action. I mean, as of late, you don't even really need to check BTC. You can just check the Nasdaq, and you'll know where BTC's price action has been for the day. So, well, yeah, I think over the next, conservatively, I said on Twitter over the next 12 months, but I think maybe over the next, 3 to 6 months, you could see that supply transfer complete. But I do think that's going over, that's going on under the hood.
Yeah, man. No, I mean, major topics, right? I mean, I think we're seeing this just insane correlation right now, and almost as we think about the newsletter, or excuse me, about the new research report that you're writing about adoption. I mean, just thinking about, I go back to something that you said when you were speaking on, at the Bitcoin conference. I mean, at the simplest level, you have a decreasing, completely known supply issuance, and we have incremental adoption, right? As you think about the inevitability, it's really just a matter of, it is inevitable. It's a timing thing, right? And then what catalysts, and part of what we'll talk about here today is just, different macro catalysts that can help expedite, adoption, right? So it's certainly an interesting time. I think we do these once a month, and every month it's kind of a new page in the book. So it's going to be interesting to see how it plays out. Well, anything you want to add there? Otherwise, let's move over to Warren, and we can kind of jam on some macro topics, which I'm sure will bring you back into the fold.
No, I mean, I think Warren's going to be the star of the show today. I guess like before he starts talking about like macro in general, I'd be curious if he sees the correlation and kind of this broader sense. Obviously, in the short term, BTC been trading heavy correlations in Nasdaq, but in like a broader sense, what do you personally think it's going to take for that kind of correlation to decrease over time, or do you not think it decreases over time?
No, I mean, look, man, I almost hate to say I agree with everything you say because it's not good for us, right? We're supposed to disagree, but I largely do, and I think for that correlation to break, you know, we basically just need to continue on the path that we're on. And I was going to start by saying, just basically, Alan Greenspan said, in the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There's no safe store of value. And that right there is one of the things that's going to break this correlation to equities is that, I think gold is yesterday's hedge. I think it's a data concept. And I think Bitcoin, as I've told you before, I think it's three things: a commodity, a currency, store of value, and a technology to transmit, data. And I think that as the adoption grows, what you're working on and what we've worked on in the past in terms of what Bitcoin is becoming, it's that the more holders, so the data that you showed that there's more steady hands in the market for longer, and their holdings are building, just as the macro picture becomes more and more difficult and more, kind of fraught with problems, you know, you see that building, that correlation is going to break. I have been very impressed with Bitcoin's price performance in light of what's gone on with the Nasdaq. If this was 2 years ago, I Bitcoin would probably be like 50 cents, right? And that shows you there's so much better, uh, so many stronger holders, so much more proliferation of it as a store of value, and its benefits in this environment. It was almost unthinkable that this would be a safe place to put your money, 10 years ago. But now it's becoming that. The macro picture continues to get way, in my view, out of hand. And, there's warning signs everywhere. We've talked about the war in Ukraine that has been used by some pundits to say that this is the trigger for inflation. That's total garbage. Inflation was entrenched before this happened, but it's a significant catalyst for higher prices. Then you have a cycle in the US of the, manic, utterly irresponsible, demented response to COVID by, amping up the budget deficit and all of the stimulus that went into the market. And now deleveraging right now is causing a lot of aberrations. Will, you put on Twitter, the darlings of COVID, they're down like 80%. But more to the point is that the easy money ride in the stock market has made a lot of money in a lot of places, but not on Main Street. And there is a big chance this bleeds off really hard. The market hasn't dealt with an increasing rate environment in more than a decade. And honestly, so let's just be frank, since 2009. And in this environment, we don't know how a lot of these things will perform. Now, my take is you watch the defensive stocks, but if you watch GE the other day, which is, I would think is the ultimate defensive stock, got slammed. Guidance is becoming very difficult for companies to relate in the market because of supply chain difficulties and difficulty forecasting the corporate purchasing cycle in a higher rate environment. This will plague us in forecasting. But under that, you're seeing an erosion of consumer confidence. And as inflation is self-perpetuating, the more you talk about it, the more you think about it, the more you feel about it, the more you plan for it, the more you see it. We're getting into a very complex environment. And, when I look at this right now, what I'm feeling is that this is Bitcoin's, chance to shine. We decouple from the high beta correlation, you receive more steady hands. But also, as we've said before, Bitcoin's lived its entire existence in a zero interest rate environment. This is the first time we're seeing what it's made of. And I think, personally, in light of everything that's been thrown at it, it's taken it in stride. The market is bound to get more out of hand. And now you have a Federal Reserve that, a Fed that has not dealt with this since Jimmy Carter appointed Volcker in 1979. You have now this is the crux of the argument of what Bitcoin going to do, or stocks, or anything, that you have a series of events now that are going to be propagated by the government in order to tame inflation, because it's destroying Main Street, that they could easily send us off the edge. And so we get into this endless game of chicken, of how far will they let the market slide before they back off rates, and what are they going to do. But it's unfortunately not that simple. When Volcker came into power, it's like you can tell I slightly view these people as authoritarian. But when he came into his appointment by Carter, he said, he caused a horrible inflation. I'm sorry, a horrible recession. Inflation was off the charts. Right now in the U.S., the IMF cut their global growth forecast. That's significant, but glossed over in the press. Very significant. But they raised their inflation forecast for the world. They think that it's going to average 10%. I think it's going to average more like 15%. Eurozone's averaging more like 30%. But way back in 1979, when Volcker came in, he had to raise rates to 17% to get it under control, and it took a very long time. That is a very real risk here. But, it's basically like, we're getting in this totally unknown time. And so when you see asset prices behaving relatively stable in an unstable world, it gives me confidence to become, more of a holder here. But, you're getting into this point in geopolitics, especially in the US, where you are having rising taxes, rising inflation, decreasing asset values. It spells recession. I think it's very apt to say, you know, Vladimir Lenin, he said the way to crush the bourgeoisie is to grind them between the millstones of taxation and inflation. And that's exactly what's happening right now, but not to the bourgeois. It's happening to everyone.
Warren, super interesting, man. I mean, so much to unpack. And even as you think about, one thing you said there, I thought was especially interesting is, you look at just kind of the market backdrop, which is driven largely by macro. You see the NASDAQ getting hammered. You see tech stocks getting hammered. It's not the, first time, right? And then you look at, okay, well, naturally you start to look at defense positions, and you mentioned GE. Another example, Boeing. right? I mean, Boeing,
Good one. Yeah.
right? I mean, that was just today. And you see these same issues plaguing them. And then you hit this point where you go, oh shit, okay, well, the traditional like safe haven, if I will, when everything's going like crazy and you're in 2020 money printing time, just go long into short-term options into earning on tech and you're going to make a shitload of money. Right?
Yeah.
I mean, it's sounds crazy. That happens, right? We're kind of in an opposite scenario now where people should flock to these defensive positions, but now the defensive positions aren't holding, right? So that, kind of identifies a bit of a macro catalyst. And okay, let's look for a more safe haven asset, right? And what are the issues that are plaguing the, just the global kind of fiat monetary system, which are driving a lot of these? You have, for example, massive inflation, right? And there's a lot of byproducts of that. And then on the other side of this, you've got this, deflationary asset with a commodity slash currency, right, slash technology that the world has never seen, and that becomes pretty interesting, right? So, I mean, we're
Absolutely.
seeing some stuff play out for sure.
I want to ask Warren this just while we're on the topic before we move on. Warren, whenever this correlation breaks down, whether that's 6 months from now, whenever, do you agree that there will be this strong aspect or dynamic of reflexivity to it? I think like in my mind, if the correlation was to break down right for several weeks, you would have people looking at this saying, "Oh wow, this is no longer a risk on asset," and then people step in with that framework, right, and then that drives the correlation even further away.
Totally.
And I think you
Yeah.
get this like massive reflexivity of that like way of thinking.
I totally agree. And and I think that's what's happening now. I think that, the way I try to look at this stuff is a longer term view in the short term. I know that's a confusing statement, but what I mean it's like it's easy to like, look at small movements and see that we're breaking away, but I'm seeing the foundation is being built. Look at the price action, look at what you were speaking about earlier, and then just simply look at like how the signal of price on a 5-year appreciation is clearly telling you that it is a safe haven of sorts for some people, and that reflexivity is growing and is passing through to different holders, different generation of holders, and different sort of let's call it the different composition of holders. And I think the more that breaks down, you could get a big effect, a lot of longs going in this thing, because this is the only perfect gold there is. I mean, come on. Like 100,000 years ago, I was a mining analyst, and they were always like, "Gold's going to run out. There's no new finds." And every year there was a new gold mine, right? And they're always finding it. They're finding it everywhere. But you know what? You've only got 23 million Bitcoin, and last I heard, there's only about 2 million left to go. That means something to people. And now that, like I said, it's three things: a store value, a currency, a commodity because it takes energy to produce, and a tech stack, that can be used in innumerable ways. That gives it so much credibility. So when that beta breaks down, I think it's going to bring in a watershed moment, and you could actually see, actually superlative outperformance on a relative and maybe even absolute basis, going forward. It's hard to be short. It's like you said once, it's like it's either like I'm just not buying it now, or I'm, you know, about to buy it, basically, is how I look at it. But I'm trying to be more patient recently.
Yeah, man, absolutely. We've got a couple questions too. I'll hold those to the end, and we'll kind of just fire away. Joe, you want to talk about mining a little bit? What are you seeing? And I'm sure we're going to bring more macro stuff in here. So Warren, you're not done, but let's pass the mic over to Joe here for a sec.
Yeah, for sure. And before I get into mining, I guess I just want to go over the report that we published this past Monday. It was titled "Bitcoin is Certainty in an Uncertain World," and it kind of has like a general macro theme to it as well. So this report that we put out on Monday, it's available on the Blockware website, basically contrasts the certainty provided by Bitcoin's immutable scarcity, only 21 million Bitcoin, with the macroeconomic uncertainty that Warren just talked about and just associated with record high inflation. So like Bitcoin is different from all other assets, both crypto and traditional equities, real estate, commodities, due to its unique property of immutable scarcity. So like unlike every other commodity, Bitcoin has this predetermined algorithmic supply schedule that cannot be changed by anyone. No bank, no government, no organization, no person can change it. So no matter how many miners join the network, like Warren just mentioned about gold, there will never be more than 21 million Bitcoin. And so like a lot of people don't really know this or don't quite understand this, but the 2015 to 2017 Bitcoin block size war actually kind of revealed just how immutable the Bitcoin protocol really is. So back then, a large number of exchanges, a large number of miners were supporting a Bitcoin hard fork that basically would have changed key consensus rules. It was the block size at the time. But Bitcoin users, meaning people that held Bitcoin and operated their own Bitcoin node, were able to resist these consensus altering changes and upgrade the network in a backward compatible way. So this battle, this block size battle, kind of set the precedent that Bitcoin is highly resistant to any sort of changes that could alter its value proposition of being perfectly scarce, portable, durable, divisible, and fungible. So Bitcoin is kind of this like shelling point on a set of rules, like with no rulers. And so these certain immutable properties make Bitcoin kind of even more attractive during these, times of macroeconomic uncertainty and just high inflation in general. And so you kind of have this certainty in Bitcoin, the asset itself, while at the exact same time, you have this uncertainty in the entire world around you. You have inflation continuing to hit 40-year record highs. The Federal Reserve is in the process of raising interest rates. Cost of oil and gas is just rapidly increasing. Consumer confidence is eroding. Russia has invaded Ukraine, and even the yield curve is inverting. So there's stress in the bond market. So all of this is kind of going on, and more dollars, yen, ruble, or any fiat currency, will inevitably be created at the end of all of this in the long run. But we can kind of find certainty that there will only ever be 21 million Bitcoin forever. So that doesn't necessarily kind of like mean that that short-term volatility in Bitcoin will disappear, in my opinion. I think it will likely remain, as well as mentioning that correlation to the NASDAQ, could potentially remain in the short term. But as adoption continues to accelerate and like the global financial system continues to go through this turbulent period, the long-term trend is still clearly, exponentially up. So the full report that has a bunch of data, analytics, and charts is on the Blockware Solutions website, but that's kind of just a very high-level overview. But I'll get into some mining now.
Hey, Joe, real quick, I want to just double tap on one thing you said that I think is important, where, as you talk about, like, I love the concept of, certainty and uncertainty, because if you ask any human being, would you rather be in control or out of control? You're going to pretty much get the same answer if they're shooting you straight, right? So, and control equals certainty to some degree in this, analogy, right? So part of this is about, mitigating the risk associated with, which is uncertainty. So mitigating the uncertainty and thereby, and embracing certainty in times that there's a lot of uncertainty, right? So we'll circle back to that, kind of in a macro context, and this concept of control and counterparty risk and so forth. But I think that's a really good paradigm to think through. This is like, It's about being comfortable with uncertainty, and the way to be most comfortable with uncertainty is to, you know, mitigate that certainty by seeking the certainty, right? So I'm all in a word salad of tangling things up here, but I love that, and I think it's going to be, everybody read the report.
Yeah, no, exactly. I mean, Bitcoin is, the only asset in the world that has no counterparty risk and no dilution risk. If you hold your own keys, you know that your share of the total Bitcoin cannot be changed, and you don't have to trust anybody. You don't have to trust a custodian. You don't have to trust a bank. You hold your own Bitcoin. But I think it's also, and I'm about to get into this, it's also very relevant to mining itself. So like in Russia, this is from Reuters. Basically, the United States imposed sanctions on dozens of people and entities in Russia, including a Russia commercial bank and a Bitcoin mining company. And so, US based companies or individuals with actual Bitcoin mining rigs in Russia were basically required to immediately cease all dealings with any hosting facilities located in Russia. So all of these machines that were from a US based company or US based individual or owned by them were turned off, and they are not going to be turned back on in Russia. So all of these rigs hosted in these Russian facilities, they can't be exported out of the country due to these new sanctions that the U.S. brought on Russia. And now millions of dollars worth of Bitcoin mining rigs that were deployed into Russia, that capital has practically vanished overnight. So I think knowing this general idea, it's highly important that if you are mining Bitcoin or you are looking to mine Bitcoin, you should make it a priority to deploy your mining rigs in a stable political jurisdiction. So while, these original hosting facilities in Russia may have offered, super attractive electricity rates, it doesn't mean much now, because now your machines aren't running. Now it's worthless. Now you may not even get your machine back if they try to sell it. Who knows how that transaction will go? There probably aren't many buyers in Russia right at the moment. So it's a very interesting time to be deploying capital in Russia, and is obviously it didn't work out for a lot of people, unfortunately. But ironically, this same situation is playing out on a more local level within the United States. So the city of Fort Worth, Texas, announced yesterday that they will be mining Bitcoin themselves. Now it's just kind of the start of this pilot project to accumulate a small amount of Bitcoin for their balance sheet, but it symbolizes to Bitcoin mining firms that, hey, we are friendly. Come build out Bitcoin mining infrastructure here. Now, in contrast, the state of New York is working on a bill that would ban Bitcoin mining operations and basically prevent existing facilities from renewing their permits for at least 2 years. This bill actually passed the New York State Assembly, and now the bill is going to advance to the New York State Senate. No guarantees that it will pass, but it is on the table. This is kind of another example of how it's important to set up your mining rigs and deploy Bitcoin mining rigs in stable, friendly political jurisdictions. But an interesting factor and idea is, as a miner, not only is it important to just keep your machines running, period, but keep them running in a free jurisdiction that's friendly, obviously, is the best strategy. But when jurisdictions like China and New York or Russia clamp down on Bitcoin mining, forcing those machines to turn off, it actually makes your machine that's still running in a friendly, stable political jurisdiction earn more Bitcoin as network difficulty adjusts downward. So network difficulty adjusts downward when those machines turn off. And this whole competition, or this banning of Bitcoin mining in various jurisdictions, basically limits your competitors, other miners, from competing for blocks with your miner. So ironically, when countries or states ban Bitcoin mining, they only make it more profitable to mine elsewhere.
Yeah, man. I mean, like, you gotta from a macro and a micro perspective, if you will, right? Macro world, micro US. I mean, you've got like sovereignty across states that can make their own rules. The same concept exists, and to put this like in a frame of reference, right? With what happened recently in Russia and so forth, like the concept again, it's counterparty risk. So if you have the ability to set up your own mining facility, put the capital towards that, operate it, get reasonable energy, like power to you, because that's a sovereign individual, and that's awesome. But most, you're seeing a lot of innovation. I mean, and frankly, like this is what we do. We service this demand in the market where there's significant demand from individuals and institutions who want to get exposure to mining, but they don't have the, interest, the appetite or the aptitude or the capital or whatever their barriers of entry into a space where there are a lot of barriers of entry, right? They don't want to do that. So then their option is to, work with a partner who can enable that, right? And by doing so, you're introducing a concept of counterparty risk, right? Like you are now relying on us, for example, to be good custodians of your investment and execute on, our promises, right? But if you then, pass on that part of that responsibility to another party, right? What you're doing there, just by factual nature, is you're introducing another layer of counterparty risk, and in this case, counterparty risk, the 1+1, 2 layers out doesn't equal 2, right? So if you're and again, anybody can make from a freedom perspective, people are able to make their own decisions, which is great, right? But it just shows the importance of minimizing that counterparty risk. And a huge part of this is, that the party who you're placing your trust in places their bets in geopolitically stable regions, right? Otherwise, it's just you are increasing your risk. You are losing control, and you're losing another layer of amount of control the further you go away from you controlling your full destiny, right? And this has been, something that we've harped on big time, from a global perspective, particularly as it pertains to Russia and other areas where you've got, authoritarian governments. But it doesn't not exist. How about that for a double negative? Domestically, right? And just like we were saying a couple months ago, like, there's a lot of risk in putting machines into Russia. We could be sitting here in a couple months looking back saying, choose your states wisely, right? So a little bit of a soapbox, but I mean, it's an interesting just kind of, situation that we're seeing play out in the world where geopolitical risk is real. Like smoke and mirrors is real. There's a lot of shiny objects, but what's the cost of that, decision, right? So I think hopefully this will just, kind of catalyze individuals to be mindful of that real risk as they make decisions and choosing partners and taking on risk, right? Warren, would love to hear your thoughts on just kind of that from a macro perspective and how you see this developing as well.
Yeah, I mean, I think it's, I've got a lot of thoughts about this. I've thought about it for a really long time. I mean, since basically like 2013, 2014. And basically what I tell anybody is like, would you feel safe dealing in a country where if you speak, even one word against the government, that they throw you in prison and throw away the key, that they have a difficult and controlled legal system that is fraught with cronyism and parties appointed by, dictators. And in these, in this environment, what would compel you to send hundreds of thousands, millions of dollars of your equipment and have zero supervision, zero oversight, complete absence of US law, no recourse to litigation, and no otherwise rights to cure on anything that would happen. And I think like those people who went there were probably one, I think they were sold a bill of goods by bad marketing. But on the other side of it, like you said, shiny objects, people think they get a deal. And I think it represents that like, we sell Bitcoin mining for everyone. And, we work from the, you know, Joe Smith from Iowa to, professional mining companies. But, the value proposition is like there's SLA, there's performance obligations. You know where your stuff is. You can visit it. You can see it. But what would possess you to give this away and to have no recourse? And I think that it's shown. After the Chinese exodus, a lot of miners went all over the world looking for power. But where do they show up? The U.S. Well-founded legal system. Extremely good law, favorable jurisdictions. But if you have a beef in the U.S., it doesn't require a mafia connection to solve it. You can go to court, you get a right of replevin, you get your equipment back right away. Not so the case. I think it's interesting, a lot of hash rate left China, it didn't go to Russia. And if the Chinese communists aren't going to Russia, well, that's a pretty good signal that you probably shouldn't either. And I think as it gets more and more convoluted, and those losses, are more widely seen, which we feel terrible for those people who got built. You're going to see that, it will still remain a decentralized network, but it will largely be, done out of the United States because of the benefits we offer.
Yeah, man. Spot on.
Warren, I wanted to ask you something like a little unrelated, but talking about macro, just because I was honestly just like looking at charts. Looking at the 10-year, when we like zoom out, I'm looking at this on log scale, but we've got this like secular downtrend from 1981, pushing a bit above that over the last week or two. But then like looking this on like a daily, it looks like we've broken this uptrend we've been in over the last month, like kind of from March down like 16 bips off the high on the 10-year. Like, what do you think in general about the like secular trend, downtrend in rates, and then what do you think on kind of a short term basis about this like slight correction we've seen in yields coming down a bit? Do you think like that's signaling the expectation of inflation peaking or like growth slowing? I guess just from a high level, what do you think about kind of the trends that we've seen in yields?
That's a great question. So, dude, look, I was thinking about this actually today as well. And what's interesting to me here is, I remember, back and some of my training, long ago is that, yield curves, bond spreads, they tend to move, in rather methodical. So, they trade in their ranges and everything, but they tend to get to a level. They trade there, expectations are repriced, economic data is anticipated and priced in, and then it moves to the next waypoint. And so I think this sort of moderation in rates, if you will, or this these aberrations that have occurred aren't really a signal yet of comfort or even disdain or or calm or any kind of signal other than that they need more data to continue. Because I think like it seems small to a lot of people, like the move in the rates and the move in the real curve, in the yield curve, right? Because in basis points it seems small because it really is, but the amount of leverage in this market is tremendous, and the amount of the ramifications of this of the yield curve moving 20 basis points, 10 basis points, or when you see the inversion, it has huge ramifications everywhere from, Main Street to, corporate bond portfolios, sovereign nations, and everywhere. So I think, we're here now. I think it's just like a wait and see approach. Like, I mean, I am like hyper bullish rates here, because what we've seen in the past is, the Fed tries to be like scalpel like precision, but they end up being like, you know, uh, using a sledgehammer on something by accident. And I think what happens is, rate expectations are bound to move up, and so we're at this pause point, and you're just going to see another move in the yield curve, soon. That's just my take on it, but I mean, I need to unpack it much further.
Yeah, that makes a lot of sense.
Yeah, and hey Joe, I didn't mean to cut you off earlier. Anything else? Anything you want to add from I mean, we entered through mining, but we always kind of seem to trend back towards macro because a lot of things just derive from that perspective. But I kind of cut you off earlier.
No, you're good. I mean, the only thing I guess I would add is when I personally look at Bitcoin, I look at it, from a long-term holding time perspective. Like, don't buy Bitcoin unless you're planning to hold it for 4+ years through another halving. And I think when you do that, you can withstand all this short-term volatility that might come through this uncertain world where macro is creating a lot of issues. But generally, no. I mean, I don't have too much more to add. Just excited about Bitcoin. I think it's a one of the most exciting technologies that we have today.
Right on, man. I think you got a lot of people on this spaces that would certainly agree with you. Cool. Well, we typically run these for 30, 45 minutes. We're a little bit over. We do these once a month. We try to do we almost always now do the last Wednesday of every month. So I'm sure we're going to have a lot of stuff that happens between now and then. I mean, one of the topics is, let's see how Elon and Twitter plays out. I mean, I think that, Will, you've got Jack Mallers coming on the podcast this week, I think. So I'm sure he'll have a lot to say about that. And, appreciate everybody tuning in. And we'll catch you next time.
Peace. Thanks,
everybody.
guys. Awesome.
See you guys.
All right,
Thanks,
later.
everybody.